Hi, this is Saturday, January the 4th, and Happy New Year to you all. This is going to be a kind of a rinse and repeat of last week. Always a good idea to watch the previous week's outlook to see whether the market reading was accurate. And of course, in this type of market, it is not really difficult. Last week was pretty accurate. We stayed in that range. The market did grind up to 32.60 or thereabout, and we've had a bit of profit taking on Friday. I would have thought that this would be an engulfing bearish pattern, but at the end, the market stabilized around 32, 35. So really, the market is just turning into a normal congestion, as actually indicated last week. This level 32.10, 32.15 is the resilience level on the bullish trend, and it has held on Thursday and Friday. Overnight on Friday, the market actually tested 32.05, but this is more or less the same range. And there's maybe a chance that selling will accelerate, but we should not anticipate anything major. I would say 3200 may be tested again. The first selling support is actually on 3188 now. So that could be just a regular kind of congestion coming up for next week. There's no change whatsoever in this arrow, so the range is still the same. In case there would be a sudden fall, and of course a few supports could be broken quite aggressively, but I don't see this happening, at least not in the next week. The market could drop to the very salient. I know this level, and as I explained that last week, shows as a resistance level, but it is effectively working as a pivot level. So we are looking at a mid-range level. That means that more or less there's 120 points above and 120 points below, and we can monitor the SPX hovering on in the upper range, and maybe if this one breaks in the lower range. This is of course a very large range, and if the market would fall below 31.25, I'm sure many trades could be hurt. But again, I don't see this market, unless of course this US iron story deteriorates further. I don't see really any selling acceleration. I would say that we have to take care of these levels, 31.88 all the way down to 31.45. So 31.25, 31.50 would be the really bottom support for the next week, or maybe even the next 2 weeks. As you can see here, the market is showing a possible upswing, but I think because the entropy is absolutely flat here, that would be a false signal based on just the turning around in the congestion area. So not to be taken too seriously. And if we look at the 1 hour chart, we have the same levels. Probably now the stronger resistance now stabilizing around 30 to 80, and I would assume that the same range will apply here. So we would have maybe a test of 32, 60, 65, maybe a loss push to 30 to 80, but here again, and as you can see, these are pretty good signals. So I would say that the market will head down early in the week, and the pivot level here is about 3200. Right, and if we now look at a longer time frame, same story, same kind of picture. In terms of graphical patterns, this is about the same. We are still in the same channel here, just going into congestion, and this chart is also pointing south. So besides the 4 hour time frame that is a little bit congested, I would say that there's now a majority of signals pointing down. Not to worry too much about a sudden selling spree, but this could be a good time for profit taking. That's it for this short video. On the next video, I will describe the current trades, and I will publish 2 videos. There will be one longer video for members of the Rhino class and a shorter video that will be posted as public. Have a nice weekend, and for subscribers, see you next week on Slack. Bye for now.